Hey y'all, welcome back. It's CJ here, and today I'll be looking at this article on housing market predictions for 2022 and 10 stocks to watch on Insider Monkey. This is off of Yahoo Finance. So, homeowners are seeing the value of their properties rise exorbitantly and are sitting on some pretty nice gains. A fixed mortgage with soaring prices in the housing market over the last year has proven to be an effective inflation hedge in the current environment. Housing Market Outlook 2022, according to the latest data compiled by Redfin on February 13, 2022, the median home sale price jumped 15% year over year to $354,762. Wow, that's a lot of money. Compared to the same period in 2022, this was a 30% increase in home prices. Similarly, the number of homes listed for sale fell 27% year over year, declining to the record low of 447,000, down 49% from the same period in 2022. Analysts expect the spring 2022 housing market to be red hot. Devin Bachman, Vice President of Research at John Burns Real Estate Consulting, told Fortune that the housing market is experiencing frustration at this point, and spring buying has sprung, and it's wild and it's crazy out there. Owing to the COVID-19 pandemic, many analysts thought that the real estate and housing market space would experience a slump. However, in mid-2020, millennials were enticed by low mortgage rates and raced to buy their first homes. The sudden influx in housing demand led to diminishing inventory, and record bidding wars were witnessed in the market last spring. As a result, there are essentially no desirable listings in the market, and the homeowners looking to sell in that market are receiving multiple offers and probably selling it well over the asking price, according to Bachman, as there is no more patience among buyers. Zillow, an American online real estate marketplace company, recently revised its prediction for 2022 housing market, while it forecast in December 2021 that the 12-month rate of home price growth would decline by 11% by the end of the year. The figure revised in January, stating that 2022 would finish with a 12-month home price increase growth rate of 16.4%. The predictions were once revised, and the company now expects the year-over-year home price growth rate to peak at 21.6% in May and to close 2022 at 17.3%. Home sales are expected to hit a 16-year high in 2022. Danielle Hale, Realtor.com chief economist, stated on February 19 in a CNBC interview that despite inventory challenges in the housing market, home sales are expected to hit a 16-year high in 2022. The housing market is 5.8 million units undersupplied relative to housing formation seen over the last decade, according to the latest research by Realtor.com. As builder gets permits to construct more houses, it will take some more time before they can fill the deficit capacity, which means that the housing prices will remain highly competitive. On February 19th, Ivy Zelman and Associate CEO told CNBC Closing Bell that she sees the housing market staying hot after a strong 2021. The number of cash buyers were up 27% and mortgage buyers were down 13%. As per reports on February 19th, sales of luxury homes priced at over $1 million were also really strong, up 39%. According to Zelman, the housing market is a great place to hide for investors amid the rising inflationary environment. 70% of homeowners are locked into mortgage rates of below 4%, so the rising rates are not hugely impacting the homeowners market is currently. But this definitely could change over time, Zelman said. However, supply chain constraints, rising inflation, and higher interest rates have started impacting builders and housing stocks as the new construction is not completed on time and funding is more expensive to procure. Housing stocks are poised to take advantage from the rising home prices, and some of the companies to watch in this environment include Builders First Score, Source Inc., Open Door Technologies Inc., and the Home Depot. BLDROPEN and HD. Our methodology. We picked these housing stocks after a careful assessment of the housing market in 2022, selecting companies that are poised to benefit or lose from the current environment. We have mentioned analyst ratings and data from 924 elite hedge funds tracked by Insider Money at the end of December 2021 was used to identify the numbers of hedge funds that hold stakes in each firm. Housing market predictions for 2022 and stocks to watch. Redfin Corporation. Redfin Corporation is a Seattle-based full-service real estate broker firm. The company leverages technology to allow its agents to buy and sell homes for consumers in exchange for a fixed listing fee. Since its inception in 2014, the company has not had a single year with positive free cash flow, which makes the stock relatively undesirable for investors. While housing sales look strong, persistent low inventory levels may be an issue for Redfin Corporation. Stephens analyst John Campbell on February 18 downgraded Redfin Corporation to equal weight from overweight with a price target of $26 down from $65. Following the company's fourth quarter report, he believes Redfin Corporation has some positives cooking around a faster than expected ramp in profit improvements, but investors are likely to have too many questions around the business model and the macro backdrop that just won't be able to be answered in a short order. The analyst has thus moved to the sidelines and awaits a better entry point in Redfin Corporation. Redfin Corporation stock plunged 9.8% on February 23rd after the Mortgage Bankers Association said that mortgage applications dropped by 3.1%, sliding to its lowest in more than 2 years. This has impacted purchase applications, which were already pressured by high home prices and tight inventory. This is a direct hit for Redfin Corporation. In the fourth quarter of 2021, hedge fund sentiment improved around Redfin Corporation. The Q4 database of Insider Monkey suggests that 18 funds were bullish on the stock, up from 12 funds in the prior quarter. Bears Capital Management is the biggest stakeholder of Redfin Corporation with 12.8 million shares worth of $493.2 million. In addition to Builders Choice Inc., Open Door Technologies, Home Depot, Redfin is a housing stock on the radar of institutional investors. Cap $493.2 million. In addition to Builders Choice Inc., Open Door Technologies, Home Depot, Redfin is a housing stock on the radar of institutional investors. Cavco Industries, based in Phoenix, Arizona. Cavco Industries is a prominent designer and builder of manufactured homes, modular homes, commercial buildings, park model RVs, and vacation cabins. Cavco Industries focus on energy efficient green homes. On February 7th, Wedbush analyst J. McCandless raised the price target of Cavco Industries Inc. to 315 from 355 from 255, and kept a neutral rating on the shares. The analyst believes demand for Cavco Industries robust with a stable backlog and pricing power across its revenue channels. However, supply chain issues are still a drag on production, but Cavco Industries Incorporation managed to grow the capacity utilization by 5% despite those headwinds. The analyst added at current levels, he views Cavco Industries as fairly valued. The overall manufactured home industry is projected to grow, and Cavco Industries is a top company in Southern America that is poised to benefit from the sector growth. Elite hedge funds hold large stakes in it. In Q4 of 2021, 25 hedge funds were bullish on it, up from 20 funds in the earlier year. Broadbay Capital holds 257,000 shares worth $81.6 million in it. Okay. Essex Property Trust, ticker symbol ESS. So the number of hedge funds that hold this is 27. As you can see, Essex Property is a real estate investment trust with an ownership interest in several multifamily residential properties across selected West Coast markets. So this dude right here just lowered the price target on ESS on February 16 to 342 from 382 and kept a buy rating on the shares. The analyst adjusted 2022 estimates moderately after the Q4 earnings and 2022 outlook for the Apartment Real Estate Investment Trust. So ESS is a reliable dividend aristocrat with 27 consistent years of dividend growth under its belt. The company declared February 24th a $2.20 per share quarterly dividend, a 5.3% increase from its prior dividend of $2.09. This dividend is payable on April 14th to shareholders of record on March 31st. And its guidance published on February 2nd. The REIT, which is a real estate investment trust, attribute its progress to improvement economic conditions, including better job growth, record job openings for the largest tech employers in EAS markets, and all the venture capital investment. So that's that. I'm not going to read all of this. So AEW Capital is the largest ESS stakeholder from the fourth quarter, holding 582,916 shares worth $205.3 million. So next is Pulte Group, ticker symbol PHM. It's a Georgia-based company that engages in the home building business in the United States. On February 3rd, it declared a quarterly dividend of 15 cents per share payable on April 3rd. So the stock's current valuation sufficiently reflects the potential for moderate industry growth and peak earnings in 2022. The analyst told investors in a bullish thesis, if the market can gain comfort with the fact that housing volume could crest at a higher level over the next few years and still support a period of elevated earnings well past 2023, a meaningful re-rating in the group could occur, according to the analyst. He believes that PHM is decidedly favorable at these levels. On February 1st, the company announced a $1 billion increase in its repurchase authorization program, which reflects the management's belief in its ongoing earnings potential of the business, which is a good thing. So it's well positioned to benefit from the climbing housing market. The hedge fund sentiment around the stock was bullish in Q4 2021. 35 funds held combined stakes worth roughly $789 million in the company. So AQR Capital Management is the biggest shareholder, holding with 1.7 million shares worth $98.2 million. So Toll Brothers, ticker symbol TOL. So it's a Pennsylvania-based building company that designs, markets, and finances residential and commercial establishments across the United States. In a red-hot housing market, companies like Toll Brothers with strong balance sheets and high-income clients in attractive markets are highly favored by investors. Current home building valuations look attractive compared to historical levels, but the analyst believes that these valuations are even cheaper than they appear. Given that the land acquired before the COVID-19 pandemic is worth more than current carrying value, industry return on equity has increased. Builders are generating positive free cash flow in the up cycle, and supply chain challenges have accelerated share gains by public builders. In the fourth quarter of 2021, 38 hedge funds were bullish on Toll Brothers, according to the Inside Monkeys recorders, up from 31 funds earlier. Greenhaven Associates held the leading stake in the company, owning more than 5 million shares worth $776 million. So all of these stocks are good if you're looking for something that's benefit from the rising prices of not only inflation, but the fact that the pricing of the real estate is going up. So these stocks benefit from that, and they're good options. I currently use the app Redfin, and I haven't had any problems out of that. I think I haven't really went too much in depth on these other ones, maybe besides Toll Brothers, but these seem like pretty good companies to look further into and do some due diligence on. But I hope y'all have a great rest of y'all day. I just wanted to check out that article. Y'all be blessed, and peace.